Welcome to Insight Private Wealth's final investment market wrap for 2023 and the year that was. Steve, it's been a bit of a rollercoaster ride this year. The Australian share market literally going up and down and all over the place. How have we gone?
Yes, Sam, it has indeed been a volatile year. In fact, I guess it's been a volatile couple of years. In fact, if we look at the start of this year, we weren't feeling that great. You might remember at the end of last year, market was negative. Overseas markets were down 20-30%. So it didn't seem like it was going to be a very good year. But in fact, when you see this, the first month of this year was one of the best Januaries on record. And it really had to do with just the market reassessing all this interest rate rises. But then you do see the market come down in March. That was when a couple of those regional US banks got into trouble. But that didn't last very long, and then the market, as you said, kind of went up and down, but actually clawed its way up to a peak of about 7.5% by the end of July, only then for the Federal Reserve and the RBA here in Australia to say, look you guys, interest rates are going to stay higher for longer. That became a bit of a mantra. And stock markets didn't like that interest rates should stay higher for longer. And they came down, and by the end of October, the Australian market was sitting at 0% for the year, not looking too good. But ever since then, since the 1st of November, the market's been going up and up and up. Now we've got the data here, Sam, to the end of November, where we're up by 4.8%. But you and I are recording this in the middle of December, and the market's even stronger than that now. It just seems to be on quite a rally.
And let's hope that this Christmas rally keeps going, eh?
And let's hope the Christmas rally keeps going.
Yes.
Exactly.
Yeah, and it's unusual because we've had significant turmoil around the world, obviously with the war in Ukraine, the war in Gaza, inflation around the world, interest rates going from record lows to record almost more recent record highs. You would have thought that the international share market would have experienced the same sort of roller coaster ride as the Australian share market, but that hasn't actually happened.
No, they've been a lot stronger, and particularly one segment of the international market, and that are the US high-tech stocks. And you can see on the chart here that we're showing the world ex-USA up just near 12%, but the USA market, the S&P 500, up 20% in US dollar terms, but the NASDAQ up 37%. And that's being driven by a very small cohort of stocks they call the Magnificent Seven. You know all the names, the big tech stocks, and they've really benefited from the artificial intelligence craze going on, and it's just resulted in an amazing year, even in the midst of rising rates, which in theory are meant to hurt tech stocks. Well, that hasn't been the case. These big tech stocks have just gone wild this year.
Yeah, and I suppose this actually feeds in nicely with our underlying principle of diversification, and investors who have only had Australian share assets in the last 12 months have really not benefited from that international exposure. That's
right, Sam. So here in this chart, we're actually putting up what an Australian investor would have got from a diversified portfolio. As you said, 4.8% in Australia. Yeah, bit average. But look at the world, the developed markets, they're up by 20%. That's what an Australian investor would have got. And the emerging markets up by 8%. So it really talks to the power of diversification. If you're in a diversified portfolio like we have here at Insight Private Wealth, then you're going to get the benefit of those big tech stocks in the NASDAQ, as well as other parts of the market that we have no way to know in advance how it's going to do. A diversified portfolio picks that up.
What about the bond sector?
Yeah, Sam, well, I'm sure as many investors would know, 2022 was the worst year on record for being in bonds.
Yep.
It's a very unusual period. Bonds are now recovering, and you can see in the chart here that quarter by quarter, the first quarter was all right, seemed to be recovering. Second quarter was miserable. Third quarter was really bad as yields kept rising as the market was pricing in future interest rate rises. But when you look at what we're showing for the last quarter, just like the equity market where stocks have gone up, here yields have come down, which has really given a boost to the bond markets. And again, our figures there are for the end of November, but in fact they're much stronger now by the middle of December. And in fact, bonds are now returning much the same as cash. And I think more importantly, Sam, it's important to note that bonds have now regained their status of where they should be. In other words, they're offering a good yield to investors, and on top of that, they're ready to protect the equities if the equities do fall. The bonds are now in a position to protect that. So it actually, not that we're great at making predictions, but it should be a very solid year for bonds next year.
Yeah, fantastic. Thanks very much for that, Steve. And thanks to everyone at home. That's a wrap from us here at Insight Private Wealth. We wish you all the very best for this Christmas festive period, and we look forward to seeing you in the new year. Take care.